This is the Asia Trade. I'm Avril Hong at the Goldman Sachs Asia Leaders Conference in Hong Kong.
And I'm Paul Allen in Sydney. The top stories this hour. Asian stocks set to mirror a weak Wall Street session. US trade has started September on a sour note, with stocks and bonds sliding amid corporate debt sales and developed world budget worries. The US revokes TSMC's authorization to ship essential gear to its main Chinese chip-making base, which follows earlier actions against Samsung and SK Hynix.
And I'm Stephen Engel in Tiananmen Square, Beijing, as China hosts a military parade marking the 80th anniversary of the end of World War II, with new weaponry and diplomatic clout on display.
All right, let's take a look at how markets are tracking ahead of this Wednesday session in the Asia Pacific. We are seeing a little bit of caution around Australian assets. Futures currently pointed about 0.4% lower. A little bit of weakness forecast there for Japan as well. We do have some breaking news out of South Korea as well. This is second quarter GDP numbers, expanding 0.7% on the quarter, a little bit better than anticipated. We've got second quarter manufacturing rising 2.5% on quarter, 2.1% on year. Construction, though, contracting 3.6% on quarter. That's a little bit more than, or just a shade under 11% on year. So a reasonably healthy set of GDP numbers from South Korea. The Bank of Korea, of course, kept rates on hold last week at 2.5%, with inflation softening, although we are expecting to see another 25 basis points of easing out of Korea in October. If we take a look at Nikkei futures, meanwhile, as mentioned, a little bit softer. The yen, that's weakened again, 148.52 now. We are seeing, a resurgence and some political uncertainty in Japan, and we'll talk a little bit more about that later in the show. Let's take a look at how U.S. futures are tracking. Meanwhile, it wasn't a great session for U.S. equities. We've got the S&P hovering around an all-time high, but it has posted its smallest monthly gain in August for almost a year. September, historically not a great month for equities, although we are seeing futures better by about 1/5% at the moment. NASDAQ futures pushing higher as well. It was not a good day for tech. The Magnificent 7 index down 1.1%, although we did see Alphabet and Apple moving higher after hours, both gaining after a U.S. judge stopped short of banning the lucrative search arrangement between the two. Crude prices also finding a little bit of support there. Ukraine did hit 2 refineries in Russia, so we've seen a series of attacks now pushing Russian crude processing to its lowest since 2022. Avril.
Yeah, and we're also watching these developments between China and Russia. The Chinese President Xi Jinping will be joined by Russia's Vladimir Putin and North Korea's Kim Jong-un as Beijing marks 80 years since Japan's defeat from the Second World War. Bloomberg's chief North Asia correspondent Stephen Engel is at Tiananmen Square for the event. So, Steve, China's military might on display here.
Yeah, that's right. Back in Tiananmen Square, back in front, of course, the main entrance to the Forbidden City. On the wall there, you will see within the hour or two the leaders that will be gathered here. Of course, Xi Jinping at the center, but also with his key guests like Vladimir Putin, who was also here 10 years ago, as I was, almost in the exact same position. You could see them up there on the top of the wall. Back then, they were accompanied by Jiang Zemin, who is, of course, since passed away. Also, Hu Jintao was there, but he is not in the public view of late. But an additional guest this time will be Kim Jong-un, coming in yesterday on train from North Korea, his first visit to China since 2019. So right now we're having a bunch of pre-pomp and ceremony with the soldiers coming up, lining up on Chang'an-jae, the main avenue that bifurcates the Forbidden City to Tiananmen Square. And if they go true to script like they did 10 years ago when I was here, we will get Xi Jinping riding in his Hongqi limo out the sunroof and essentially addressing the troops, saying, "Tongzhimen hao, Tongzhimen xingku le," which means, "Hello, comrades, good work, comrades." And then he will retreat back to the top of the wall and top of the Mao painting and give a speech and address. And then we will get the military hardware, from tanks, new missile technologies, drones, and overhead will be the latest fighter jets. So it will be quite a ceremony here in the center of Beijing.
Steve, tell us a little bit more about what we're expecting to see there. Could there potentially be any new hardware unveiled? And also in the crowd, you talked about the foreign leaders there. Might we see some new faces in terms of the military as well?
Well, that's a very good question, and we don't know, simply because we do know that 10 years ago, Xi Jinping made news in his speech, essentially was going to modernize and also scale back and make the PLA, the People's Liberation Army, more efficient, removing some 300,000 soldiers. And since then, we've seen a bit of a purge under Xi Jinping of top generals and leaders, including the vice chairman of the Central Military Commission. He has been out of sight for quite some time. If he appears up on top of that wall today, then we know that he is not necessarily under investigation. If he's missing, that will send a very big sign. Of course, 2 defense ministers in the last few years have also been dismissed, including Li Shangfu and others, including the head of the rocket force. That was something that was announced back 10 years ago. The rocket force essentially is in charge of China's nuclear arsenal, but there's been a lot of retrenchment and reorganization even within that body. So it will be interesting to listen to every single word that Xi Jinping has to say. Meanwhile, of course, there's going to be some, I guess you could say, a war on history a bit. Xi Jinping really wants to portray over and over again, especially to the Western world, that China and their guest, Russia, the Soviet Union back in World War II, played a major role in the victory over the Japanese as well as the Nazis in Europe, and that history should be reflected in that. Already, we know that Vladimir Putin does his military parades through Red Square to commemorate the end of World War II. Xi Jinping did it 10 years ago. He's doing it again today. To show that it was the Chinese who lost upwards of 20 million people in the war against the Japanese, and the Soviet Union lost upwards of 25 to 30 million people. So again, a bit of reinforcement of their participation in World War II.
All right, Bloomberg Chief North Asia correspondent Stephen Engel there in Beijing. Well, Indonesian President Prabowo Subianto is heading to China to attend Beijing's major military parade. He earlier had to skip the Shanghai Cooperation Organization summit in Tianjin due to week-long protests in his country. Prabowo's decision shows growing confidence that the social unrest in Indonesia may have already peaked after the government agreed to key demands from demonstrators. And President Trump says he's not looking at lowering tariffs on India a week after doubling U.S. levies on the country's imports to 50%. Speaking at a White House event, Trump continued to criticize what he said was an imbalanced trade relationship between Washington and New Delhi.
We get along with India very well, but India has, you have to understand, for many years it was a one-sided relationship. Only now, since I came along, and because of the power that we have with tariffs, India was charging us tremendous tariffs, about the highest in the world. They were about the highest in the world, number one. And we, therefore, weren't doing much business with India, but they were doing business with us because we weren't charging them. Foolishly, we weren't charging them.
Now, aside from the tariff uncertainty, investors also weighing fiscal concerns across developed markets as stocks also face a historically rocky month. Let's get a preview of the trading day with our executive editor for Asia Markets, Paul Dobson. So, Paul, we're seeing in terms of tech, mega caps, they are extending those declines. Valuations are concerned here, but then also these higher yields that are affecting their attractiveness. What are you watching out for the session?
Good morning, Avril. So it's really the bond market that has been the focus for investors at the start of this week. Once the US came back from holiday, bond syndication desks all around the world look a little bit like those Chinese military parades. Everybody's scurrying around dealing with record supply in Europe. very hefty supply in the US as well, and that's really been helping to catalyze that increase in bond yields that we've seen. That, as well as people concerned about the fiscal profligacy of governments around the world, most prominently the UK, and inflation risks as well. So all of that is pushing up those yields, particularly on the longest maturity bonds, where demand seems a little bit more vulnerable at the moment. And that, in turn, is weighing on those valuations, the long-term outlook for earnings and discount rates for the technology companies. And so that's why we've seen them come under some pressure as a sort of knock-on impact from the bonds market so far this week. Now, it's not all been bad news. Some of the government debt sales that we've seen so far, the Japanese 10-year sale yesterday, even the UK syndication, had strong demand, were well taken down. The question is, can the bond investors and the bond world make enough room in their portfolios, and is the demand there to take down all of this supply that's coming all at once?
Paul, you mentioned the UK there. I mean, we saw a similar story. We've got yields rising, markets slipping. I mean, the budget due before the end of the year, that's a conundrum, isn't it? Staying within the fiscal rules. What's the choice here? Lift taxes, slash spending, or both?
It is. It's a difficult one for the government to try to puzzle out exactly how to see its way through it. And I think that, that's why the market is expressing those risks in the form of demanding a higher premium for UK government debt, particularly on those 30-year bonds again. And it just sort of shows you the importance of fiscal kind of prudence once the bond market smells some danger. So, you could draw a parallel almost, although it's an emerging market versus a developed market, but with what we saw in Indonesia this week. The riots that we saw over the weekend initially sent pretty severe jitters through the market, causing a sell-off in stocks and the currency, and putting the bonds under pressure as well. But then we heard those reassuring words from Shery, the finance minister, and that kind of settled the market pretty much immediately. If she's in control, the market thinks, then this is okay. We're confident enough to stay with Indonesia. And the UK could do with somebody like that right at this moment to sort of be the adult in the room, as it were, and to be able to say, don't worry, we've got this. This is what we're going to do. This is the plan. Stick with us. It's all going to be okay.
All right, Bloomberg's executive editor for Asia Markets, Paul Dobson there. Now, we're also following the latest updates on the Fed. Treasury Secretary Scott Bessent is reportedly planning to start interviews on Friday for a successor to Jerome Powell. This is according to a Wall Street Journal report, which says there are 11 contenders, including Fed governors Chris Waller and Michelle Bowman. Following the interviews, Bessent plans to recommend a final list of candidates to President Trump. Fed Governor Lisa Cook's lawyer says President Trump's move to oust her is based only on a cut-and-paste claim of mortgage fraud and social media posts. In a series of court filings, Cook's attorney argued Trump lacked valid grounds to fire Cook for cause. He also said social media posts by Federal Housing Finance Agency Director Bill Pulte and a criminal referral to the DOJ didn't give Cook a chance to respond before she was fired. Avril.
Yes, still to come on the Asia Trade. We're live from Goldman Sachs' inaugural Asia Leaders Conference, where we'll be speaking with their vice chairman and APEC ex-Japan president. The Asia Group weighs in on the power struggles within Japan's LDP. Plus, we'll also be talking crypto with Galaxy Digital. Much more ahead. This is Bloomberg.
Well, let's take a look at how some of the big US tech names are moving after hours. Got both Apple and Alphabet moving higher, in the case of Alphabet especially so. Now, this is after a US judge stopped short of banning the lucrative search arrangement between Google and Apple, which generates about $20 billion in revenue per year for Apple. Both those stocks pushing higher there. Federal judge also ruled that Google's going to have to share some of its search data with competitors, but Google is not required to sell its Chrome web browser. It did, however, bar Google from entering into exclusive contracts for internet search, although Apple exempt there. Google, for its part, says it's got some concerns, privacy concerns about that antitrust ruling. and it is reviewing the court decision on Google search. Now you see TSMC, Taiwan Semiconductor ADRs there at the bottom of the screen, kind of flat, a little bit softer there at the moment. We'll tell you why. The US has revoked TSMC's waiver to freely ship essential equipment to its key chip-making base in China. Now, that move mirrors action taken against Chinese facilities operated by Samsung and SK Hynix. Bloomberg's Tom Giles has been tracking this story. Tom, what more details do we know about this?
This is just another example of the U.S. doing everything it can to tighten and constrain China's ability to get advanced semiconductors. They've taken many steps, imposing lots of limits on the sale of U.S. and the availability of products that have U.S. components in them. This is just another step of the U.S. reaching into other countries, big companies like TSMC, telling them what they can and can't do. And the way it does that is by focusing on U.S.-made products and saying, we're going to impose limits on their availability in China. And in particular for TSMC, it's these operations in Nanjing. It's not a big component. It's not a big percentage of what TSMC does, but it's strategic, right? Because TSMC has key customers in China, and it's easier for them to sell using a facility on the ground on the mainland.
Tom, this is also mirroring similar moves on SK Hynix, Samsung Electronics. What are we expecting on the impact overall on the chip supply chain?
Yeah, certainly what this is it's basically saying that if you are a company like ASML, Tokyo Electron, AMAT here in the U.S., KLA, there's a whole host of chip supply companies. These are basically chip making equipment makers. So they're the companies, they're the suppliers that sell to TSMC. TSMC needs these products in order to manufacture chips. And remember, TSMC is the world's leading manufacturer of semiconductors, in particular semiconductors that are used for the most advanced capabilities like artificial intelligence. Anything you do to make it harder for TSMC to get these components, that can basically potentially disrupt its production and the sale of these products into the Chinese market.
All right, Bloomberg's Tom Giles there in San Francisco. Let's get to some other tech stories that we're tracking. Apple shares slipped after it was revealed that its lead AI researcher for robotics has left to join Meta as part of a wave of departures hitting the iPhone maker. Sources say 3 more members of Apple's large language models team are also leaving, 2 to OpenAI and 1 to Anthropic. The exits follow the loss of the group's chief and raise fresh questions about Apple's AI strategy. AI unicorn Anthropic has meanwhile closed a $13 billion funding round, nearly tripling its valuation to $183 billion and making it one of the world's most valuable startups. The deal was led by Iconic Capital with participation from Fidelity, Lightspeed, Singapore's GIC and Inside Partners. Anthropic says it will use the funds to meet enterprise demand, expand globally, and advance AI safety research as competition with OpenAI and Google intensifies. And OpenAI has agreed to acquire product testing startup StatSig for $1.1 billion in stock, one of its biggest acquisitions to date. StatSig CEO Vijay Raji will join OpenAI as Chief Technology Officer of Applications, helping developers build safe AI products. The Seattle-based startup, used by firms including Eventbrite and SoundCloud, will continue operating independently after the deal, which is pending regulatory approval. We have more ahead on the Asia trade. This is Bloomberg.
As stated in the news release distributed to all of you, yesterday evening, the CEO and chairman, Takeshi Minami, stepped down. I would like to sincerely apologize for any inconvenience caused.
Suntory's president Nobuhiro Tori confirming the resignation of CEO and chairman Takeshi Ninami after his home was searched for cannabis-based drugs. And here's a look as well at how the stock moved on the news yesterday. Ninami is now hinting that he may try to clear his name. For more, let's bring in Bloomberg senior editor Reed Stevenson. So Reed, we know Ninami as an incredibly outspoken business leader in Japan. He's now seeking to clear his name. What more do we know about this case?
Well, the thing to watch today is going to be a meeting in the afternoon, or a press conference actually in the afternoon, of the Keizai Doyukai. It's Japan's second biggest business lobby. Ninami is actually the chairman of this group. He still remains the chairman. And based on what we've seen from media reports and some reporting, it does appear that he's actually going to show up at this news conference. And so when you look at that fact, plus a couple interviews he's given to a Japanese magazine as well as the Asahi newspaper, it does seem like he might come out swinging to try and clear his name. And the thing to note here is that, you know, it's quite unusual when there is a corporate scandal in Japan. You know, there's usually a playbook for these sorts of things. There are apologies, there's remorse, there's resignations, there's a turning a new page with new management, and then, you know, whoever was at the center of the storm kind of quietly disappears. It doesn't seem like Ninami is going to quietly disappear.
Yeah, this is an unusual case, as you say, Reed, because the products that he was found with contain CBD, which is a non-psychoactive substance, which might be somewhat perplexing for viewers outside of Japan, because in many countries this is legal. Some doctors even prescribe it. So does Ninami possibly have a case for leniency here?
Indeed. I mean, the fact is that CBD is actually legal in Japan as long as it's completely free of THC. Now, the amounts are just so small as to the point where if you detect even a tiny amount, you are possibly liable for, you know, a narcotics law violation. Now, just to note, officially, you know, Suntory, the company, has not even identified the substance. They call them supplements, and they're possibly under suspicion. But the reporting we've seen elsewhere, and also from Ninami's interviews in the media, that they were CBD products. He had arranged to have them come into Japan. He had believed that they were completely free of the illegal substance THC, and essentially he's asserting that there was no crime committed, and asserted also that police found nothing when they searched his house. And so, you know, this is going to be quite a dramatic saga and keep him in the news. And look, he's always been in the news. He's been outspoken. He's been very willing to poke at Japan's staid business establishment. So we're just going to have to see how this presser plays out and how he decides to, you know, kind of wage a public trial here.
All right, Bloomberg senior editor Reed Stevenson there. Some of the other corporate stories we're following. Jane Street's $10.1 billion haul in second quarter net trading revenue has beat out all of the biggest banks to set a Wall Street record. Sources tell Bloomberg the sales figure more than doubled from a year earlier, also pushing Jane Street's first half totals to a record. Trading volumes have been elevated since President Trump announced a raft of global tariffs as investors rush to reposition portfolios. And Bloomberg's learned Tesla's Indian market debut has underwhelmed so far, with orders for about 600 cars since mid-July. Sources say those numbers are short of even Tesla's own expectations. More in a moment. This is Bloomberg. Let's take a look at what's happening in global bonds at the moment. We've got 30-year bond futures for the US pointing up a little bit. 30-year yield approaching 5%. The 10-year also pushing high. We do, of course, have a Fed meeting a bit later on this month with swaps currently pricing at about 20 basis points of easing. But we've seen bonds mostly around the world rising. Japan had a yields rising, that is. Japan had a very solid 10-year auction on Tuesday. Yields actually fell half a basis point. Well, I guess you take the win. There's going to be another test on Thursday with the 30-year auction. Political uncertainty also lingering in Japan. UK yields also pushed higher. A few concerns on the budget there, as we were discussing. Australian bonds, though, a bit of an outlier. Yields on the 10-year falling right now, 435.95. Futures indicating that Aussie bonds might just withstand this global debt sell-off. Averill.
Yeah, Paul, and you've just been highlighting how we also are watching out for the September FOMC. Before that, we have a couple of data points to get through, and then the Fed independence under threat. A lot of focus on the U.S. Central Bank. I'm here in Hong Kong at the Goldman Sachs event. It's hosting its inaugural Asia Leaders Conference. It's bringing together top global businesses, investors. Who better to get insights from than our next guest, who is Robert Kaplan, Vice Chairman at Goldman Sachs, and of course, former Dallas Fed President. Robert, really great to have you with us.
Great to be with you.
So let's start with the latest. We're hearing reports that the Treasury Secretary could begin in Fed chair as soon as this week. Who in your mind do you want to see taking over from Chair Powell?
I'm not going to comment on individual candidates, obviously, but Jay Powell's term as chairman ends in May, and so it makes sense that they should start the interview process. I think the main thing for the leader, the next leader of the Fed, has to be somebody who has strong grounding in economics and can make independent judgments about the economy, can forge a consensus, can oversee the Fed and manage it, and can operate, in my view, in an independent manner to make the best decisions for the U.S. economy.
An independent central bank is something you've cited previously as being the mark of a successful nation. We've seen Trump ramping up pressure on Powell, moving to fire Lisa Cook, moving as well potentially to get a majority on the board. How worrying is that for you?
Well, I won't comment on those individual situations, but I do think, as you've said, it's critical that the people that are in the governor's seats and in the bank president's seats operate without regard to political influence or political considerations and divorce themselves from worrying about political pressure. They have to make the best decisions they can. They can debate, they can disagree, they can bring innovative ideas, but it's got to be done on the basis of what they think is the best decision for the U.S. economy. And I think it's critical that that ethic, I think it's in the interest of the United States for that ethic to be maintained.
They're under a lot of pressure, though. How do you think they can work with these constraints? How might that shape policy making between now and potentially in May?
So the best way to deal with these pressures, if I'm at the Fed, is to ignore them and to focus on the job. And I would right now be focusing on my team on the decision for the September meeting. And it's not completely clear. The job market, on the one hand, we're at full employment, but we think hiring is slowed to stall speed. We'll see what the jobs report is Friday. So that's on one side, but inflation is above target. And that's before considering the tariffs. Service sector inflation is still very sticky. And so I'd be focusing my team on making the best decision in September. I personally would be leaning toward cutting in September, but I doubt it will be the start of a rate-cutting cycle. I think they'll take it one meeting at a time. But those cross currents are complicated enough. I'd make sure, if I were at the Fed, keep my team focused on the issue at hand and doing our job.
Do you see strength in the labor market? You were talking during the break about some of these structural changes underway. How is that going to affect?
So GDP growth in the United States is solid, but somewhat sluggish. We started the year thinking GDP growth in the United States might be 2.25%. I think our best judgment at Goldman Sachs now, it's more likely to be closer to 1.5%. So, and why is that? Number one, the tariffs, at least in the short run, and the uncertainty have slowed growth. The second thing that slowed growth is labor force. We are curtailing labor force supply. There are at least 10 million undocumented immigrants in the United States that are key parts of construction, agriculture, other industries that are either not reporting to work, they're not shopping, and it's creating also some stickiness and slowing in the economy. And so I think the reason the unemployment rate is so low is because supply is declining, but hiring is also very sluggish. So I think the Fed is starting to realize maybe they need to look through the headline unemployment rate and realize that even though we're still looks like we're at full employment on the surface, the hiring level is very sluggish because growth is sluggish. And that would be the argument for making some adjustment to the Fed funds rate, even though inflation is still above target.
It's interesting also because this is a Fed that, for the most part, has stuck to its guns about data dependency. What is your sense of how the BLS needs to evolve along with these structural changes that you just cited in the economy, including trade, AI?
Yeah.
How does it need to?
So you may know when I was at the Fed, and since I've left, I've never been a fan of the term data dependency because it's a piece of the puzzle. What do I mean by that? There are BLS and Commerce Department figures every month. The problem is they're backward looking, they're aggregated, they tend to get revised later. So you want to look at them, but you don't want to overreact to any one data print. You also want to talk to businesses, you want to look at structural trends, you want to look at the whole mosaic. But in that regard, to your point, it's critical that the Fed still rely on BLS information. But here, let me give you an example. We've got a significant AI data center power boom going on in the United States. It will be disruptive to many industries, but disruptive in a constructive way that will increase productivity growth. That's disinflationary. We haven't seen that quite yet show up in the data, but I think it will. And so even though inflation's running above target, that structural driver has to be taken into account because it's one reason why inflation may moderate. And that's a good example when you're at the Fed. You want to look at data, but you want to look at the whole picture, including structural drivers, in forming a judgment.
That's really interesting because you talk about these cross currents they include for the inflationary outlook, and this is coming at a time when we still might not have seen fully the impact from tariffs.
That's right.
What is your sense of, is that going to be coming, one-off or more in waves?
Well, we're going to find out, and that's still somewhat in flux, but we do know the following. Before even considering tariffs, as I said, service sector inflation is still sticky. But we know the following about goods. First of all, goods for the last 2 years have been disinflating globally. What's driving that? China overcapacity, manufacturing overcapacity. That overcapacity hasn't gone away. The tariff situation may complicate it, but I think over the horizon, global overcapacity in goods, and the fact that U.S. consumers don't need to buy goods. They can shift, they can substitute, they're price sensitive. They could decide to go to dinner instead of buying a set of goods. I think that makes me think it is more likely these tariffs will be one time, more likely to be, and that the effect may moderate over time. That and the AI boom, which is also disinflationary, and also the fact that growth is sluggish, which also limits demand for goods. I think all those things make me more optimistic that maybe you'll see some moderation of the tariff impact when we look back a year from now.
Would it not make sense then, beyond September, for there to be more cuts then?
Well, those who want more cuts will argue that. The truth is, I mentioned cross currents. I think in a period where you've got cross currents, the best thing I think you can do is don't be a prognosticator, be a risk manager. And that means take it one meeting at a time. So all my attention will be focused on September. After that's done, I'll wipe the slate clean and do my analysis between September and the November meeting. And that's why I say I wouldn't assume this is the start of a rate cutting cycle. I think they'll shorten up the time frame and the prognostications and take it one meeting at a time.
All right, Robert, really great to chat. It's been a pleasure. Robert Kaplan is Vice Chairman at Goldman Sachs. Back to you, Paul.
All right, April Hong there in Hong Kong, the Goldman Sachs Leaders Conference. We're going to have more interviews out of Goldman Sachs Asia Leaders Conference this morning as well. The bank's APAC ex-Japan President Kevin Sneader and Galaxy Digital founder and CEO Mike Novogratz both going to be joining us in the next hour. Still to come, the Asia Group joins us as we discuss the future of Japanese Prime Minister Ishiba's Liberal Democratic Party after a key power broker moved to step down. This is Bloomberg. Let's take a look at how Japanese assets are tracking towards the open. Futures a little bit softer by about 0.2%. We did have a pretty good 10-year auction on Tuesday. Strongest demand there since October 2023. Yields just slipping a little. We've got the 10-year yield at 1.615. The yen, meanwhile, weakening 148.55 because we're seeing a bit of political uncertainty returning, or, well, it's not returning, it's always been there in the Japanese political scene at the moment. The Prime Minister Shigeru Ishiba's key power broker, Hiroshi Moriyama, has offered to step down. Now, this comes after a meeting on the LDP's upper house election setback, and it could weaken Ishiba's political standing. Bloomberg reporter Yoshiaki Nohara joins us now from Tokyo. So, Yoshiaki, what's the latest on Japan's Prime Minister and his government?
Hi. So, Paul, what happened yesterday was that they examined what went wrong in the July election. And as a result of that, the Prime Minister apologized that he didn't meet the expectations of the people. And also, one of the key members of the party, Secretary General Hiroshi Moriyama, he said that he would like to resign, and it's now up to Ishiba whether to accept his resignation or not.
What is this going to mean in the meantime for policy making and potentially fiscal spending plans?
That's a great question. There's a strong likelihood that Prime Minister is going to get started with the stimulus package because he repeated this point that he would like to do more urgently to help people cope with inflation. And LDP's message to help people didn't go far during the July election. So that's why he's trying to get the stimulus package going to do more to help people with the rising cost of living. But there's no sign of how big the stimulus package is going to be and what kind of content is that going to be, given that opposition parties have been calling for a tax cut instead of cash handouts. So that's going to be a point to be monitored going forward.
Well, Prime Minister Ishiba has repeatedly said he's not planning to step down. So can he hang on, or is the party going to mobilize against him?
Well, yesterday, he didn't say, he just said he will make the decision at the appropriate time, but he did not say what kind of decision he's talking about. So it's unclear whether he is trying to step down or, stay on for a longer time. But for now, it seems like he's sending a message that the party has many urgent issues to be tackled right away, so that he is busy tackling these challenges for the public. And that's kind of sending a message that he will focus on his job and try to stay on for now.
All right, Bloomberg economics and government reporter Yoshiaki Nohara there. For more on this, let's get to Rintaro Nishimura, Japan practice associate at the Asia Group. Rintaro, it's been another interesting week in Japanese politics. We've had a number of high-ranking officials either offering to step down from the LDP or stepping down. Is this good for Prime Minister Ishiba in that other people are taking the blame for that upper house election defeat, or bad, and that his circle of allies is shrinking?
First, thank you for having me. I think it's not a good thing that his top brass, the party leadership, has basically all announced that they would like to step down. It wasn't just Moriyama yesterday, it was 3 other senior executives. And clearly that is a sign that to many that this is a sinking ship and that Ishiba's days may be numbered. It will not help the prime minister. That in the report that was released yesterday, there was no direct mention of responsibility, his responsibility or the leadership's responsibility. And so lawmakers, I think, are still waiting to see if Ishiba himself will take responsibility. And I don't think the resignation or the intent to resign by the other senior leadership will take the blame off of him. At the same time, Ishiba is not very well known for having friends within the party, so it will be very hard to see him try and find new members to replace these folks, especially Moriyama, who is very key to coordination with the opposition, which will be critical for his stimulus package, but also for realizing policy goals that he may have in the near future.
Well, so far, Prime Minister Ishiba's made it clear that he has no intention to resign. But how likely is it that LDP lawmakers and branch representatives could make a move against him and force him out?
It all comes down to September 8th, which is when the LDP will technically vote to see if they would like to hold an early presidential election. It would require 172 votes for a majority of lawmakers and prefectural branches to vote in favor of this measure. We've seen in recent days that members of his own cabinet have actually been announcing publicly that they would actually support this measure, which is, again, not a good sign ahead of that September 8th vote. There's also reports that came out overnight that senior advisor and former Prime Minister Taro Aso is planning to announce today that he would also support this measure. So again, not a lot going for the Prime Minister at this point. I think it's still neck and neck. We won't really know until September 8th, but judging from what we saw yesterday, I think that the report and also the way Ishiba handled things, it certainly is not looking good for the Prime Minister.
It's interesting, though, because we are seeing approval among the public for Ishiba ticking up a little. What is your sense of, are the public's frustrations more about Ishiba or the LDP at this stage?
This is a very interesting situation where Ishiba has essentially took the LDP into two national elections and lost both of them, but somehow is seeing a rebound in approval, mostly because there seems to be a lot of concern about what could come after Ishiba, particularly around the momentum that we saw with the right-wing party Sanseito and also the prospect of potentially Sanae Takaichi taking the presidency from Ishiba after his potential resignation. So there are concerns, obviously, that what's to come might be more right-wing or hardline government, and that has boosted Ishiba in a sense. I think there's a lot more of a concern or frustration within the public about the way in which the LDP seems to be more focused on its own politics of who's going to replace Ishiba or what's going to happen to Ishiba, rather than the pressing issues which the Prime Minister did mention yesterday, which include inflation, the tariff situation, agriculture policy, disaster relief. There's a lot of issues that are ongoing, but I think to the public it seems that the LDP is more interested in its own future rather than the public and Japan as a whole.
Indeed, there are more pressing issues, the tariff risk, as you highlighted, among them. Do you think that in order to ensure his survival, we might see Ishiba aggressively pushing forward spending plans and a way to buffer from the economic pains?
I think it's certainly possible, given the way in which we've seen in the last days that Ishiba is planning to instruct the crafting of a stimulus package. At the same time, I do think that he is constrained in the fact that I think people see in the LDP that this is a sinking ship, like I said earlier, and this reality in which a minority government will have to work with the opposition, there is really no incentive for the opposition to be helping Ishiba form a huge stimulus package that essentially helps him continue as prime minister. So I think there will be a push and pull between the ruling parties and also the opposition parties on what would look like they are doing their best to help the public with inflation and tariffs and whatnot, but also not looking like they are supporting this prime minister as perhaps his days may be numbered in the coming weeks and months.
All right, Rintaro. Nishimura, Japan Practice Associate at the Asia Group. Thanks so much for joining us today. We have more ahead on the Asia trade. This is Bloomberg. All right, who doesn't love a parade? We're alive here in Beijing at the Forbidden City. Chinese allies gathering for a military parade. This is to celebrate the 80 years since the end of the Second World War. That's not the parade, by the way. It's going to get more impressive than that. We will see quite the array of military hardware. China preparing to showcase its latest anti-ship missiles, combat drones, nuclear-capable ballistic missiles at the event as well, which includes cutting-edge technology such as hypersonic systems as well. In the crowds, going to be a number of luminaries as well. Russia's Vladimir Putin will be alongside Chinese President Xi Jinping. North Korea's Kim Jong-un will also be in attendance after making the journey yesterday on a bulletproof train from North Korea. There'll also be heads of state from Vietnam, Malaysia, Pakistan, Belarus, Iran, Serbia and Slovakia as well. So we'll be bringing you live pictures of this once it gets underway. Xi Jinping will address the troops very briefly. He'll also be participating in the parade himself, riding in an open-topped Chinese-made limousine. Then at the conclusion of the parade, we will hear remarks from Xi Jinping as well. It'll be interesting to note who's in the crowd from the military behind him. There has recently been a purge of the leadership in the military. So who's there, who's not there? That's going to be of great interest to China watchers as well. So there we see world leaders starting to arrive for the parade, getting underway soon, 80 years since the end of World War II. Okay, we've got market opens in Sydney, Seoul and Tokyo up next. Stay with us for that. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. Also this hour, some impressive visions coming out of Beijing at the moment. It is a military parade, as we mentioned, to celebrate 80 years since the end of the Second World War. First such parade we've seen in China in a decade. So there we see a number of foreign leaders gathering. There'll be Russia's president, of course, Vladimir Putin in the crowd, alongside North Korea's Kim Jong-un, but a number of heads of state from other countries as well, Avril, from Vietnam, Malaysia, Pakistan, Iran as well in attendance.
Indeed, these world leaders descending on Beijing at a time when China is showcasing its military might. It's also interesting how we've been seeing Xi, Putin and Kim. They are set to appear together at this Chinese military parade as well. And earlier on, we saw how Xi sort of embraced the likes of Putin and Modi at the time when the countries from these two leaders have been mired in conflict for this year, Paul.
All right, we'll keep an eye on that throughout the hour as things get going. But what's going right now? Markets opening in Japan, Korea, and here in Australia as well. So let's take a look at how we're tracking. We've got a little bit of weakness on the Nikkei and the topics at the moment. We've got a somewhat weak yen as well, softening below that 148 level, perhaps due to the political upheaval that we've seen in Japan. A key advisor to Prime Minister Ishiba offering his resignation. Had a pretty good result for the Japanese 10-year yield, however. however, the strongest 10-year auction since October 2023. So markets somewhat soothed by that, but there's another test coming up tomorrow. Japan will be holding a 30-year bond auction on Thursday, and it's longer dated yields that have been really feeling the pressure recently. Let's take a look at what's happening in Korea as well. We did get second quarter GDP numbers out of Korea a little bit earlier. Those were a very modest beat. We had GDP coming in at 0.7% for the quarter. The expectation was for 0.6%. And we've got the Korean won little change there at the moment. Let's take a look at how we're tracking for US Treasuries as well, because I did mention that we've seen a little bit of a sell-off, particularly towards the longer end of the curve. The 30-year yields not changed a great deal from what we saw during the US session, still parked there at 4.96, but closing in on that 5% threshold. The 10-year yield at 4.26, that's backing off a little bit from the levels that we saw earlier. There is, of course, a Fed meeting this month. Swaps currently pricing at about 20 basis points of easing, but before we get there, bunch of key data still to come. Jobs openings, jobless claims, non-farm payrolls all due out this week also. Quick word on oil. We've seen that edging a little bit higher. Ukraine has hit a couple of refineries in Russia. So there's been a series of attacks on Russian crude, pushing processing to the lowest level since we've seen in 2022. We got an OPEC Plus meeting this weekend as well to decide October output, although we're not really expecting any change there, Avril.
Yeah, and Paul, I'm live at the Goldman Sachs Asia Leaders Conference here in Hong Kong, where we're hearing from top global businesses, investors, and it's really interesting how amid all this, we've been seeing a recent surprise rally in Chinese markets. Let's bring in our next guest, Kevin Sneader, Asia Pacific ex-Japan president at Goldman Sachs. So, Kevin, let's start with China, because we're seeing in terms of the market performance, it's really being underpinned by liquidity, even against the backdrop of these macro risks. What are you seeing from global investor flows?
Well, certainly, as you say, this is a very interesting time in terms of the rally that's taken place in Chinese equities. This is not an overnight rally. It's worth noting that it was a year ago that we saw the media conferences and the announcement of various measures. And really since then, there have been a few milestones along the way. The first milestone, of course, was in Hong Kong, where we saw the Hong Kong market really move. And now we're seeing the onshore market A-share rally taking place. And what we're hearing from our clients and investors is sentiment has improved. Foreign investors are showing more interest, but the positioning changes are yet to come. Most of what we're seeing is still domestically oriented. And I think it's worth remembering that a big driver of this rally remains the retail investor in China. And it's that retail investor who's got this excess saving that a lot of people are talking about, the household savings that are built up, and they're looking for other options, and the equity markets are providing some of that focus. But sentiment has improved. The first half in China saw relatively strong GDP growth. The second half is likely to be more challenging. So we should keep a careful attention to the underpinnings here, the fundamentals. China still faces many challenges, but this rally in the equity markets has got some legs.
What are your clients saying about what they want to see more of before that positioning comes back?
Well, it really depends which clients. If, from your question, you're asking about the foreign investor, clarity and consistency are the key words that come to mind. Because ultimately, there's still a focus on some of the headwinds, the demographic headwinds, deflation and the challenges that we're seeing from a combination of overcapacity and demand limitations. And finally, of course, the backdrop for all of this, the geopolitics, remains and lingers. So progress in each of these is what underpins confidence to ensure the foreign investor can return and the flows can move. We are seeing some return, though. I think it's important to acknowledge that. Hedge fund positioning has improved. But the long onlys, the longer term investor, that's going to take a lot more clarity and a lot more consistency before we see the flows move.
Has that been enough for Goldman to lower its bar on investing in China, as well as, build on the business that's already here?
Well, we've been in China for 40 years. We have a long history here. We are very committed to our business here. We've been maintaining the footprint through tough times and good times. This is a moment when we see certainly opportunity, And we continue to look at China with a lens that says there are plenty of places where our clients need services, need the support that we can provide, and we're going to be there for them. And it's with that lens, our client lens, that we're very focused on the opportunities that we have in China.
We talked about Hong Kong earlier. We're seeing this IPO boom. Is Goldman looking at expansion potentially here?
Well, this has been a busy time. 57 so far this year, 200 in the pipeline. There's a lot of activity building in Hong Kong. And in that context, we're hiring. We certainly are hiring. We continue to look at the opportunity to meet the needs of our clients. But we'll do it in a thoughtful way, because one of the things which I'm very focused on, and my colleagues are very focused on, is making sure that we're there for our clients, but we don't get ahead of ourselves. And so it's a thoughtful approach, but we certainly are hiring.
Are you hiring in India, where you recently opened a bigger Mumbai office? But this is also coming against the backdrop of fraught US-India relations. I mean, is that going to affect your plans, your footprint in India?
Well, we've been in India for a long time, and our expansion and growth in India spans many decades. But this is an important moment. We have indeed, as you said, just opened a new location. It's an expansion of what we had previously. It's a world-class facility. We're very proud of it. And in that context, we did so because we do see opportunity in India. The underpinning factors in India, which essentially come down to a combination of demographics, political stability, and indeed reform, which is increasing the financial focus and power of the domestic market in India, all of those come together and make us confident about the longer-term opportunity. And just as I said with China, in India we take that longer-term view. We want to make sure we're there for our clients, and so we'll look beyond near-term challenges, and that's why we've made this commitment through an expanded location.
The relations with the US, though, do you not think that that could potentially affect the longer-term trajectory of India's growth story? The short term does inform the long term.
Obviously, you have to pay careful attention to it. And I think in reality, the India story has been a domestic story to a large degree. If you just look at Q2 GDP, it came in at 7.8%. And that was largely driven because of a combination of consumption beginning to improve and also the services economy. So of course it does matter what happens in terms of broader geopolitical context, the political relationship, the export, all of that matters. But the Indian story has a large domestic component to it as well. And I hope and believe that over time these differences, as the world itself transitions to a different set of international relations, the images coming out of Beijing talk to this. We're in a period of change. Hopefully it will settle down. And over the course of that time, I'm pretty confident we'll find opportunities to help our clients.
Talk to me about how you're looking to build the India business. What are the largest revenue generators for Goldman in the country now?
Well, in India, we have many different parts of our business that we're already proud of and continue to expand. Our investment banking business there has certainly benefited from this expansion. The ECM side of the business has certainly seen growth, and we've made a conscious effort to do that. But it's not just there. We see our equities business continue to develop. So I'm very much of a view that our India business will look like the rest of our business across the region over time. And there's plenty of places, therefore, where we'll continue to expand and develop.
You talked about hiring earlier. In which areas, which cities, particularly for India, what sort of headcount are you looking at?
Well, our major presence is in Mumbai from the point of view of the client service business, but we're also present in Hyderabad and Bangalore through our global capability centres. All of those locations will be a focus for hiring in India.
Kevin, really good to chat. Thank you so much. All the best for the rest of the event.
Appreciate it. Thanks for being here.
Kevin Sneader is APEC ex-Japan president at Goldman Sachs. Back to you, Paul.
Thanks, Averill. Averill there in Hong Kong at the Goldman Sachs Asia Leaders Conference. Now we're also following the latest updates on the Fed. Treasury Secretary Scott Bessent reportedly planning to start interviews on Friday for a successor to Jerome Powell. This is according to a Wall Street Journal report, which says there are 11 contenders, including Fed Governors Chris Waller and Michelle Bowman. Following the interviews, Bessent plans to recommend a final list of candidates to President Trump. And Fed Governor Lisa Cook's lawyer says President Trump's move to oust her is based only on cut-and-paste claims of mortgage fraud and social media posts. In a series of court filings, Cook's attorney argued Trump lacked valid grounds to fire Cook for cause. He also said social media posts by Federal Housing Finance Agency Director Bill Pulte and a criminal referral to the DOJ didn't give Cook a chance to respond before she was fired. Right, let's take a look at how we're tracking here in Australia. We've got a little bit of softness on the ASX, off by 0.5%. One bright spot, though, gold miners pushing the whole metals and mining sector higher. Gold miners in Australia better by 1.73% collectively, and of course the gold price above $3,500 an ounce. Aussie dollar a little moved, about 65 cents at the moment. Keep an eye on that, though. We will get second quarter GDP numbers out of Australia a bit later on. We're expecting to see a modest increase there to 1.6%. Australian bonds, meanwhile, not really seeing yields tick up like we are elsewhere. Things are pretty stable there. The 10-year yield right now, 436.40 at the moment. Now, I want to check in on Suntory as well, because the CEO, Takeshi Ninami, has, of course, stepped down. This is after, the cannabis-based products were a result of a police investigation. He had his house searched. In a published interview, he says he didn't think the products he obtained were illegal, and he's suggesting he will try to clear his name. Local media reporting that those were CBD products, which are legal in Japan so long as they're completely free of THC, which is the psychoactive compound in cannabis. Suntory, meanwhile, shares only just a little bit softer in the early going in Japan. We have more ahead on the Asia trade. This is Bloomberg. Chinese President Xi Jinping will be joined by Russia's Vladimir Putin and North Korea's Kim Jong-un as Beijing marks 80 years since Japan's defeat in World War II. Bloomberg's chief North Asia correspondent Stephen Engel is there at Tiananmen Square for the event. Steve, what are you seeing so far, and what's the message China's trying to send today?
Well, there are clearly many different storylines coming from this military parade. At the top of that, of course, is China's marking 80 years since the end of the World War II, and obviously wants to portray to the world that China, as well as the Soviet Union, now, of course, Russia, paid a great price in their contribution to the defeat of Japan and fascism in Europe. There was some 47 million combined deaths between China and the Soviet Union. So it's not rewriting history, it's just re-emphasizing that China played its part as well in defeating the Axis parties, the powers. Now, Xi Jinping, if it follows suit to 2015, when I was last year, and the last time they marked a similar anniversary, the 70th anniversary of the winning of the World War II, Xi Jinping, in his speech, which he will be giving, we don't have the exact timetable, but possibly within the next hour. But 10 years ago, he announced that the People's Liberation Army would be reduced by some 300,000 soldiers. And it really ushered in one of the biggest military restructurings in Chinese history. And also, we've seen a corruption purge of top leaders, in particular in the rocket force, which is overseeing China's nuclear arsenal. The rocket force commander, Li Yuchao, has been replaced. And now He Weidong, the vice chair of the Central Military Commission, might be missing from the dais today here at the parade. No official reason has been given for his extended absence from public, but he may indeed be the highest casualty of China's expanding military corruption probe, which has already claimed Li Shangfu, a former defense minister, as well as another senior admiral from the PLA Navy, Miao Hua, who was removed. So, again, Xi Jinping came to power promising to root out corruption, in particular from the PLA. He said they'll go after tigers and flies. So big generals and also rank-and-file soldiers. So that's the backdrop of this as they roll out the military hardware and also the growing diplomatic clout with Vladimir Putin, also Kim Jong-un here, and other leaders like Anwar Ibrahim from Malaysia and others from Iran and other nations.
Yeah, Steve, as you're speaking, we continue to see these world leaders streaming in. It's also interesting what we've seen between China and Russia at this event. They've inked a gas pipeline deal, perhaps drawing potentially the attention of Donald Trump. But what are you seeing in terms of the Chinese president at this stage, perhaps redrawing the geopolitical map amid all this?
Well, we saw it obviously over the last couple of days at the SCO in Tianjin. Remarkable footage, of course, of Xi Jinping and Vladimir Putin and Narendra Modi clasping hands and sharing a good joke and a good laugh there. Also, of course, Modi and Putin spending a long time in Putin's limousine talking about a number of different things. We all know that India's purchases of Russian-sanctioned oil and crude has, sparked the ire of Washington, saying India is profiteering from lower-cost purchases of Russian oil. But on top of that, we got a surprise announcement yesterday. The long, hard-fought victory for Vladimir Putin is to get China's backing for the second gas pipeline from Russia to China, the Power of Siberia 2. That, according to Russian sources, has been agreed to by China. It has been hard fought. I mean, it is something that the Chinese have resisted doing so for a long time because of the high costs involved, and also the Chinese economy is slowing and energy demand has waned. So why embark on such a new expensive pipeline at this time? But the Russians say it's going to go ahead with China's blessing, but we're still awaiting China's announcement that they are going to go ahead Power of Siberia too. So that's probably the most prominent deal that is sort of been announced coming from this gathering of leaders here in China this week.
Steve, as you're speaking there, we're seeing North Korean leader Kim Jong-un arriving as well. You mentioned a little bit earlier about we've seen something of a purge inside the military. Are we potentially going to see some new faces among the crowd today? And what are we likely to hear in Xi Jinping's speech?
Well, we could get some sort of clarity, or we might not. We simply don't know. But we do know that since Xi took power in 2012, 2013, he has ousted nearly 1/5 of the generals that he appointed. Hu Jintao, his predecessors, Hu Jintao and Jiang Zemin, they didn't get rid of any of their generals during their terms in office. So Xi Jinping definitely revamping the hierarchy in the military and demanding more loyalty and more discipline within the ranks. So the corruption probe has gone wide and deep. But Xi Jinping understands that his grip on power, which is now extended into a third consecutive term, really lies, as Mao Zedong said, in holding on to the power of the military. Mao Zedong was famous for saying political power grows out of the barrel of a gun. So I think Xi Jinping has adopted that kind of mentality. He has strengthened and increased discipline within the ranks of the military. And that's going to be on show, on display here on the streets of Beijing within a matter of the next hour, showing the modernization of the People's Liberation Army, from the latest stealth fighters, the J-20A, to, of course, hypersonic missiles, the latest technologies there, and drone warfare is going to be on display.
All right, Bloomberg Chief North Asia correspondent Stephen Engel reporting from Tiananmen Square. Well, we've just had EU futures open. Let's take a look at how things are tracking at the moment. We're seeing a little bit of weakness in the euro right now. It's off by, just about 0.8 of, even less, 0.1 of 1% there. Stocks futures, though, pointing higher, though perhaps surprising considering some of the selling that we've seen over the past 24 hours. We've got DAX futures higher also by 0.5%. We saw long-dated yields in the UK rising to their highest since 1988, and UK stocks selling off as well on Tuesday. Both the euro, as you see there, and the British pound also weakening. All right, we've got more ahead on the Asia trade. This is Bloomberg.
We're taking you live now to Tiananmen Square, where world leaders continue streaming in for China's military parade. And we're seeing on the red carpet the Indonesian leader Prabowo Subianto, who, of course, had his trip to China delayed. He couldn't attend the SCO earlier in the week because of protests in the country now at this very event. In the meantime, we're also tracking developments related to U.S. tech companies. Google will be required to share share online search data with rivals following a U.S. ruling in the country's largest antitrust case in almost 3 decades. Bloomberg Tech senior editor Nick Turner joins us now. So, Nick, this is a big case that we've been tracking. It seems like Google will have to make some adjustments, but overall, it's been seen as a sign of relief for the company.
Yes, certainly Google investors or Alphabet investors are pretty happy with this outcome. The stock is up about 7% in late trading, and it seemed like Google was spared of some of the worst penalties, such as a potential breakup, having to sell the Chrome browser, or also having its Apple search deal unwound, which essentially, perhaps surprisingly, stayed intact through this ruling.
Yeah, Google seemed to have some misgivings after the judgment came down, however. What did they have to say?
Yeah, I mean, they're still appealing this, and I think that they, ultimately this is all based on the premise that they're monopoly and that they have abused that monopoly, and obviously they take issue with that. I think the sharing of data presents potential privacy issues in their mind, and even if these remedies weren't necessarily as severe as what people had expected, they're not something that Google embraces.
Yes, so we saw stocks rising after hours. Apple stocks rising as well. So there was some good news for Apple in this ruling as well.
Yeah, I mean, the Apple one is interesting. I think a lot of people thought that the government was going to force Google and Apple to break up their partnership. Now, this is the partnership that that Apple essentially makes Google the default on its devices and for the Safari browser and other things. And it can still do that, but go ahead.
All right, Bloomberg Tech senior editor Nick Turner there in San Francisco. Just wanted to interrupt, Nick, there to take you back to Tiananmen Square because, of course, you see Vladimir Putin, the Russian leader, arriving for this parade to mark the victory in World War II 80 years ago. So Vladimir Putin now arriving to round out this collection of world leaders. Earlier we saw Kim Jong-un arrive, Indonesian President Prabowo Subianto arriving a short time ago as well. Prabowo was, of course, unable to attend the Shanghai Cooperation Organization summit a little bit earlier, but his attendance today signals, well, perhaps some of those domestic issues back in Indonesia coming under control. So with the leadership and the guests almost assembled, we do anticipate that parade will be getting underway very soon. So we'll be keeping an eye out for not only what military hardware China is able to display, but for any new faces or faces that are missing in the crowd in terms of China's military leadership following Xi Jinping's purge. More ahead on the Asia Trade. This is Bloomberg. Let's briefly take you back to the Forbidden City in Beijing. There you see the Chinese Premier Xi Jinping greeting the world leaders that have gathered for this military parade in honor of 80 years since victory in World War II. So there you have the world leaders arriving there. The parade itself will be shortly getting you underway. We'll bring you pictures of that as it happens. Some other news that's happened in the last few moments. Gold, set another fresh record right now, $3,536 an ounce. That is, in fact, off the high that we hit a few moments ago, where it did briefly break above 3,545. So gold on a tear at the moment, up about 30% this year. UBS sees gold pushing higher as well in coming quarters. bets on US rate cuts pretty much fueling this rally. Silver also performing very strongly, outperforming gold, in fact. So they got the gold price at a fresh record. Aussie gold miners doing very well today as well. I want to take a quick look at cryptocurrencies also. Some of the cryptocurrencies have been struggling a little, ticking up a little bit now. Bitcoin higher, back above 111,000, though it's well off that $124,000 peak, though perhaps underscoring the volatility of this asset. The big catalyst for both gold and cryptocurrencies going to be coming later on this week when we get a number of readouts on jobs data in the US. April.
Yeah, those Fed rate cut bets potentially fueling further gains for cryptos. And it's not too shabby, their performance so far this year, even though they've pulled back from the highs we saw in the middle of last month, underpinned by ETFs, friendly crypto legislation. I'm here at the Goldman Sachs Asia Leaders Conference in Hong Kong. And let's bring in our next guest. He is Mike Novogratz, CEO at Galaxy Digital. Mike, great to see you.
Thank you.
So we're talking about crypto prices, and I'll pick your brains in a bit. But let's talk about the crypto legislation that you've seen in the US. It's been increasingly friendly. How do you think Trump so far has delivered on making the US the Bitcoin capital of the world?
Listen, so far it's been a 10 out of 10. The old administration really was everything they could do to be anti-crypto. And we've gone 180 degrees. And so we've already got one piece of legislation called the Genius Act, which gives us a framework around stable coins, which is really important. There's one more big piece that needs to happen. It's called Market Structure Bill, and hopefully that happens either in the fourth quarter or early next year. But just as importantly, all the regulatory agencies, the SEC, the CFTC, FinCEN, the Federal Reserve, have all taken a very friendly posture to crypto. And so the U.S. went from way behind in crypto friendliness and crypto legislation to now the world leader. And because it's still the biggest economy, pretty much everyone's going to have to match what the U.S. is doing. And so it's crazy how fast that shift happened, but it's created a tremendous amount of enthusiasm, not just from retail, which traditionally is what fuels crypto prices, but from institutions. So Galaxy, our company, tries to sit in between institutions and the crypto community, and every big institution is reaching out to us. The fact that I'm here at the Goldman Sachs conference for financial leaders to talk about crypto tells you something, right? And so Goldman are among the institutions that have been engaged with you. Every single institution is trying to figure out what their role in as the world tokenizes and digitalizes. The SEC chairman made a speech about 2 weeks ago, which was stunningly important, where he said he thinks every financial market should move on chain. Like, that was such a radical thought that Gary Gensler would say that would have been a 0 out of 100 chance. And so it's going to take a long time for all financial markets to move on chain, but that's the direction things are happening. And so that's why you now, if you're a board of directors of a major company, you have to have a view on crypto. Right. Before you can just ignore it, it's a small little crazy thing.
It's a big change. We're here in Hong Kong. I wanted to get your thoughts on the prospects for an offshore yuan-backed stable coins. How are you assessing that? What is your sense of how much demand we could see from that?
So far, almost all usage of stable coins have been in dollars, and they've been for liquidity in crypto markets, right? So if I want to buy one crypto, and you're always doing it against a stable coin, and some for payments, remittances. In the not so distant future, the biggest user of stable coins is going to be AI. You're going to pick up your phone and say, buy my groceries. And your grocery agent, who knows what you like to eat, knows that you're on a diet or not on a diet, is going to figure out what groceries to buy from where, and they're not going to send a wire instruction or a Venmo. Mm-hmm. They're going to send a digital currency over a crypto rail. Right. And so sometime in the near distant future, I don't know if it's 1 year or 5 years, you're going to see an explosion of stablecoin transactions. And at that point, the Euro stablecoin, Galaxy has done a Euro stablecoin with partners that just getting started. So you think offshore yuan back is just a matter of time? Just a matter of time. And how much potential demand-wise do you think could be unlocked there? Listen, we have an unfortunate Cold War between the U.S. and China, right? That the battle line now is be around AI, but also around currency strength. So you're going to see the U.S. currency is weakening right now, and cyclically it's weakening. But the government wants dollarization in other places. So you're going to see the government push other countries to try to dollarize. And I think you're going to see China do the same thing. And we'll see whoever has a better economic policy in the long run will have a more stable currency. But I don't think it's a fait accompli that the dollar will always be the only dominant currency.
Talk to us about deal making in the industry. We reported recently on the Solana Treasury that your company, along with Jump and Multicoin, might be exploring. Is that something you're going to be able to confirm? What's the thinking behind that?
Yeah, unfortunately, the SEC doesn't allow us to speak of things when you're discussing it, so I can't talk about that today. What I can tell you is the whole treasury company movement, which has brought lots of activity into crypto. A lot of the reason prices of Ethereum are higher is because of these two treasury companies, SBET and BNMR. I was a little bit skeptical that they would work so well, and they've worked unbelievably well, and it tells you there's still so many more people that are comfortable buying an equity than a crypto outright. And so it's like the aperture of people.
You've warned previously, though, on these treasury plays that they may have peaked. Has that thinking changed now?
I think in the long run, you're going to have to provide a lot of value added to keep a premium over the underlying coin, right? And so when some of these would trade 5 times the NAV of the coin, you really have to believe you're with a special team. I think you're going to see most of them trade closer to NAV of the coin. And then they'll be like closed-end funds. Fine businesses, the ones that are better run will attract more capital. The ones that aren't will trade at a discount and probably be swallowed up.
Okay, one last question for you before we have to let you go. Bitcoin, Ethereum, where do you see it at the end of the year? Because you are more positive on Ethereum than Bitcoin, right?
Listen, it comes and goes, right? I think the markets are really challenging right now to predict. The equity markets are as high as they've been, right? And there's tremendous bullish enthusiasm. And so you could see a correction there.
So maybe not 150 on Bitcoin?
It's going to be either or. If we take off, if Ethereum can break through 5,000, it will be much higher.
Do you think it's going to be this year?
If it's not this year, it'll be next year. I think there's a shot. Most likely it's this year, because what normally happens is because of hedge fund economics, because of enthusiasm, when you've had a fast horse, it runs fastest the last 2 months of the year.
We'll see how that all pans out. Mike, great to chat with you. Thank you so much. Mike Novogratz, CEO at Galaxy Digital. Paul.
All right, Avril there in Hong Kong at the Goldman Sachs Asia Leaders Conference. You're seeing live pictures there of the foreign dignitaries at the Forbidden City greeting presumably war veterans there. It is the 80-year anniversary of the victory over the Axis forces in World War II. So the leaders are now in position. The parade will be shortly beginning. You saw Kim Jong-un there. Fun fact for you, Kim Jong-un's appearance. First time a North Korean leader has attended a Chinese military parade since 1959. And way back then, it was his grandfather, Kim Il-sung, attending along with the former Soviet leader, Nikita Khrushchev. So Kim Jong-un, Vladimir Putin flanking Xi Jinping there as they take their positions for the start of this military parade. We'll bring you more pictures as we get them from Beijing and more ahead on the Asia trade. This is Bloomberg. Here's some tech stories that we're tracking. Apple shares slipped after it was revealed that its lead AI researcher for robotics has left to join Meta. as part of a wave of departures hitting the iPhone maker. Sources say 3 more members of Apple's large language models team are also leaving. 2 of them are going to OpenAI and another one's going to Anthropic. The exits follow the loss of the group's chief and raise fresh questions about Apple's AI strategy. AI unicorn Anthropic, meanwhile, has closed a $13 billion funding round. That nearly triples its valuation to $183 billion and makes it one of the world's most valuable startups. The deal was led by Iconic Capital, with participation from Fidelity, Lightspeed, Singapore's GIC, and Insight Partners. Anthropic says it will use the funds to meet enterprise demand, expand globally, and advance AI safety research as competition with OpenAI and Google intensifies. And OpenAI has agreed to acquire product testing startup StatSig for $1.1 billion in stock, one of its biggest acquisitions to date. StatSig CEO Vijay Raji will join OpenAI as Chief Technology Officer of Applications, helping developers build safe AI products. The Seattle-based startup, used by firms including Eventbrite and SoundCloud, will continue operating independently after the deal, which is pending regulatory approval. Alphabet shares surged after the bell following a US judge's ruling that Google won't have to sell Chrome but must share some search data with rivals. The judge also banned Google from exclusive search deals but also allowed it to continue making payments to third parties. Google says it's reviewing the decision and flagged privacy concerns over the antitrust ruling. Well, the US has revoked TSMC's waiver to freely ship essential equipment to its key chip-making base in China, and that move mirrors actions taken against Chinese facilities operated by Samsung and SK Hynix. Bloomberg's senior executive editor for Global Tech, Tom Giles, has been tracking this. Tom, what more do we know?
Yeah, this isn't just another example of the ways that the U.S. government under Trump is really trying to make it really difficult for China to get the chips that it needs. And in the U.S.'s view, this is about national security. This is about making it hard for China to use advanced chips to develop things that could be a threat to U.S. national security, like in its military. You've been showing footage all morning of the big military parade there, and I think that just underscores what the U.S. is trying to achieve. And this shows the lengths to which the U.S. will go in order to hamstring China and its abilities. This time, it's targeting a manufacturing facility in Nanjing that's run by TSMC, the leading maker of advanced chips, the world's leading maker of these advanced chips. And specifically what it's doing is it's basically saying that if you are a supplier of the machines that TSMC needs to manufacture chips, you're going to have to jump through an extra set of hoops in order to sell your products to TSMC if, one, they contain U.S. components, which many of them do, and two, if it's destined for this facility in Nanjing. Never mind that these are not the most advanced chips. Never mind that this only accounts for 3% of TSMC's overall production, right? It's about sending a signal that the U.S. is going to continue to take steps to make it harder for them to get these products, even when it means we're going to interfere in the operations of companies like ASML or Tokyo Electron that have nothing, that are not based in the U.S. That's exactly what the U.S. has been engaged in for many, many years now, and that is getting companies in U.S. allied countries like Japan, like the Netherlands, to come alongside and help make life harder for Chinese chip makers.
How much harder is this going to make life for companies up and down the supply chain, as you alluded to what we're seeing from ASML and Tokyo Electron?
Yep. It's not going to make it impossible, but it is an extra set of requirements that they're going to have to meet, seeking permission. It means that U.S. bureaucrats are going to be looking at these proposals, making determinations and saying, well, you want to buy this $383 million machine that ASML sells? That machine has U.S. components in it. I'm using that as just one example. And we're going to make that determination of whether we think that that's okay or not okay. What it could mean for the supply chain is longer delays. We saw during the pandemic that if you disrupt the supply chain, if you slow it down, that can throw a lot of production into disarray of a whole host of products. And it's another headache. It's another hoop that these suppliers are going to have to jump through. And it's not just Netherlands and Japan, right? These are some big U.S. manufacturers of semiconductor equipment, like AMAT, like KLA. So it's not just foreign companies, it's U.S. companies as well that the U.S. is going to make life complicated for in the coming months and years.
As you say, the U.S. showing that it will not hesitate to go through these great lengths to make things difficult for China. Our global tech executive editor for Bloomberg, Tom Giles, for us. Great to get your insights. Thanks so much. Now, of course, we'll also be watching TSMC when Taiwan opens in a few minutes, and keep an eye on Chinese chip stocks as well amid U.S. pressure to squeeze chip makers' access to China. In the meantime, shares of Chinese fighter jet makers, robotics companies, and other defense-related firms are in the spotlight amid this major military parade in Beijing. Our Asia equities reporter, Winnie Su, joins us for more on this. So, Winnie, we are seeing, along with this ceremony underway, that stocks are rising along with it. What is the focus here?
Yeah, so really all eyes on the parade right now, and investors will be watching closely the equipment upgrades and new technologies. But as you mentioned, we've seen that CSI Defense Index up about 22% so far this year, really outperforming the broader CSI 300 index that was only up 14%. So a lot of excitement has been building up, and from history, we've learned that usually these stocks rise ahead of the military parade. Lots of expectations here. However, when we look at what happened in 2015, we still have to have a bit of a caution here, because usually stocks tend to fall after the parade because of the lack of catalysts and also because expectations are built in. However, the key sectors people are still watching here, jets we mentioned because of how it was highlighted during the India and Pakistan conflict, but also drones, for example, missiles, and also some of the other areas like AI and robotics. So people would really want to see how the artificial intelligence is going to be integrated in, for example, how to simulate the battles, and how robotics are really going to come into play. And these are stocks that have been really outperforming and have been doing really well so far this year.
Yeah, there's been a lot of enthusiasm more generally around Chinese equities, to the point that we've got Chinese investors now borrowing record amounts of cash to buy local stocks. What could possibly go wrong?
Right. So actually, like you mentioned, the retail sentiment is still very strong. However, when you look at just what happened yesterday in the session, the stocks was down about 0.7%. So we are starting to see a bit of a profit taking when the overall sentiment has been pretty strong. We're talking about CSI 300 up about 10% in the past month. So right now, seeing a bit of kind of that healthy correction, whether it's in chips, in brokerages, in tech stocks, those provide some opportunity for investors who have been investing in these stocks to take a bit of profit. But like you mentioned, when we look at that overall liquidity-driven rally here with margins at record, that is showing that retail investors are still willing to come in and join the rally. So overall, we are expecting still the sentiment to remain quite strong.
All right, Bloomberg's Asia equities reporter Winnie Su there. Let's take you back to Beijing, where the military parade is getting underway. We're hearing a bit of music ahead of the pomp and ceremony. Let's take a listen in. We have more ahead on the Asia trade. This is Bloomberg. Let's take a look at how bonds in Japan are tracking. We did, of course, have a reasonably encouraging 10-year auction yesterday. We have a bit of pressure coming in on the longer end of the curve there. 30-year yield right now, 3.2686. And there will be a 30-year bond auction in Japan on Thursday. So that will provide another test for the market. But the 10-year yield now just ticking up a little in Japan. It did back off a little bit after that auction yesterday, which saw the strongest demand since October 2023. You see at the bottom of your screen there, the US 30-year yield also closing in on that 5% level, Avril.
Yeah, Paul, in terms of markets, we'll be keeping an eye on those Chinese defense stocks when trading gets underway, as this display of military might in Beijing is on full display there, taking you to these live pictures out of Beijing. And we know, of course, how the Chinese president will be hosting the likes of Putin and Kim at this very event as well, Paul.
Yes, and we saw the President Xi walking alongside Presidents Putin, also Kim Jong-un there. They greeted some of China's World War II veterans, some of who are now over 100 years old. And that is, of course, nominally what this parade is in honor of. 80 years since the victory over the Axis forces in 1945. So we'll be hearing remarks pretty soon from Xi Jinping ahead of the parade, and then once things get underway, we're going to be watching very closely for perhaps any displays of new military hardware and perhaps some new leadership in the military as well. But that is it from the Asia trade. Markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen. The China show up next. This is Bloomberg.